What's going on, guys? Welcome back to the channel. It's Abdul here, and today I want to walk you through the strategy that changed my life, the strike method. Strike is basically 6 simple steps, and it doesn't mean we're striking something. Strike basically stands for 6 words, and we're gonna go through all of them today. Basically, this strike method, it's what I developed from years of trading. I've been trading 11 years to qualify good trades and disqualify the bad trades. So when I wake up to the chart in the morning, if I don't see one of the 6 steps, I walk away and I go on my day. There's nothing for me to be trading. You guys always want to remember that you're in the market for your own freedom. You don't want to be slave to the chart 24/7 looking at the chart. If you don't see a trade by 11 in the morning Eastern time, just walk away. Have one session that you're trading one pair until you get profitable. When you see consistency, that's when you can start looking for other pairs so you can have more setups, more edge to the market. If you're trading gold, that's good. Stick to gold. I've been trading gold for years now, and I'm sticking to gold. I don't trade anything else. Every now and then I just trade NASDAQ. I've traded everything that you could think of. Long story short, let's get to the chart, and I want to show you what I start by looking at when I get to the market every single morning. So I trade New York session every single morning. I get to the chart by 8 a.m. to see what's happening on the chart, and I start by the 4-hour time frame. So starting here, this is gold. We are at the 4-hour time frame. If you're trading Forex, CFD, it's the same thing. CFD and the futures, the price will just be a little different, but it's the same exact chart. So if it's GC, if it's XAU, it's the same thing, guys. Don't get yourself confused. Futures market is popular now, and a lot of people trade futures. I trade futures, and I trade CFDs. So we are working in the CFD chart right now, which is the gold versus US dollar. First thing that I look for is the bias for the day. First thing you want to look for is knowing the direction. You want to know where the price is going for that day. So first thing, you want to see where the support and resistance for the day. And if you don't know what support and resistance is, we're going to cover everything in this video. A support basically is a level where the price hits from the bottom and it can't, a resistance is a level where the price hits from the bottom and it can't break to the top side. So for example, when we see the 4 hours rejecting here and rejecting here again, rejecting here again, rejecting here, all these are indicators that we have a strong resistance here. Resistance basically means it's a ceiling, the price that cannot break through. The second thing you want to look for is the next 4-hour support. Support is basically another level right there where the price has failed to break to the downside. So right here you had the price rejected multiple times, failed to break, almost the same level right there. All these are support level, guys. So you need to know where your support levels and where your resistance, because that's where you're going to set up your stop losses and where you're going to set up your take profits. If you can't find your support and resistance, we can zoom out a little bit more and find even more resistance and support. Since I do this like every single day for like 11 years now, I have a lot of levels marked because the market repeats itself, guys. Every single level that you marked a year ago or 2 years ago, it's going to get hit at some point. If it's a support today, it's going to be a resistance tomorrow. So for right now, if we're looking at the support level here in the 4-hour time frame, it's the same support level that you have in the daily. So that 39.75, that's where the price has failed to break to the downside multiple times. If you're trading gold as of today, August 3rd, that's where you think the price is going to reject from. Every time it has touched this level, it bounced back up. So I want you to think of the price like a bouncy ball. It hits the floor, goes back to the ceiling. It hits the ceiling, goes back to the floor. Right there. The ball is right here. It hits the floor, goes back to the ceiling. Hits the floor again, goes back to the ceiling. Right there. That's another formation right here that everybody knows here, the W formation, which is an indicator of reversal to the top side. We don't want to talk about this today. It's an easy thing. If you've been trading for a while, you already know what a W is and you know what an M is. What I want to bug you with today is the break of structure, because that's what you'll be looking for to enter your trade. So let's start right here on the 4 hour. Let's say we got in the morning and we seen the price rejecting this level right here. So I know for sure if I'm looking for buys, because the price is rejecting here, I will have to look for higher lows that doesn't break below each other's. So if the price is forming higher lows, that's an indicator for me that we have an uptrend. Now that you have marked your bias for the day and you know where the price is going, the next thing that you need to do is find your setup. And by finding your setup, you will need to look for a structure and wait for it to be broken. While we're looking for that, I'll clean the chart so quick and we'll jump to a different time frame. To break down strike for you guys, it's just 6 simple words that I put together for myself to remind me of what I'm looking for. And let's start with structure. So strike is basically, sorry, I got my T right here. I got to move this away. So strike. So if you are a strike trader, you will be looking for these steps. Number one, you are looking for a structure. There we go. Number two, you'll be looking for a touch. 3, you'll be looking for rejection. 4, identify, which you'll be identifying your key entries. And 5, key entry. 6 is the last step that everybody loves, which is execution. So if I don't see all the 5 steps, I'm not executing. And basically the last thing that I'll be looking for is a structure, but all these leads to execution. So let's start by the structure and see where we can find the structure and how we can identify if it's a structure or not. So now that we have seen the 4-hour time frame going upwards, let's replay this and see where we'll be going. So let's go down to a lower time frame. There's a couple of trades here that I took this morning and I want to replay them with you guys so we can see live how the strike method works. So we are going down to the 5 minutes time frame here. All right, that was a trade that I took earlier this morning, and I had another short trade that I took right here. And I will explain it to you guys why I took it, how I took it, and we're gonna implement everything that we're gonna talk about today. That was a very quick entry and it hit the target in no time. That was like 1 to 4 right there. All right, guys, so we're going down to the 5 minutes time frame. As we have confirmed, we are looking here for lower highs that doesn't break above each other's. That confirms the downtrend that you see right here on the 5 minutes. But if you go up in the 4 hours, right there, you still have the downtrend right here. The price is creating lower highs that doesn't break above each other's. And from the bottom, it's creating higher lows that doesn't break below each other's right there. That's another formation that I don't want to bug you guys about right now, but that's what I'm talking about here, right? So right there, you're seeing the price. Every time it hits the bottom of this trend, it reverses and goes back up. Right here, every time it hits the top of this, it reverses and goes back down. So right now, you know for sure that you're in a downtrend that's about to end because it's interfering here with the uptrend as well. So the price is getting close to the daily support level right there. Every time it hits it, it reverses back up. So going down to the 5 minutes time frame again. Let's clean this again. All right. So right here, we're down in the 5 minutes after we confirm that we have a downtrend. What you'll be looking for is lower highs that doesn't break above each other's to confirm that you are in a downtrend. Here you guys can see, we confirmed that. So you just need to look for the last one. And then we need to look for our structure, which is the first step of the strike method. So a structure, basically, I don't want to get you guys confused with a lot of fancy terms. A structure is basically a consolidation zone that the price cannot break through to the upside or the downside. So this right there, I'll call it a structure. If we go, let's find another structure here. This right there, I'll call it a structure. If you guys see what I mean, I will mark it for you here. So let me put array here and right there. So this zone right there, it's a no trade zone. You need the price to break either below it or above it to look for an entry. And that's the breakout structure that we'll be looking for. And before you get to the breakout structure, you will need to qualify the touch and rejection so you can wait for the price to come back to you. And we're gonna qualify this together right now. So let's go down here. Usually qualify your touch and rejection on a higher time frame. So let's go up to the 15 minutes. I want to show you what happened here. All right, so here is the 15 minutes. All right, you have the price rejected this level and retested and rejected. Same thing happened here again. It rejected this level, retested, rejected. So that's telling you that you're in a downtrend, and it sets your expectation for where you want to put your stop loss, because your stop loss will always go above the previous high that didn't get broken. And you don't want to get caught right here. For example, I had a friend of mine caught this trade a little bit late today, and he wanted to enter right here, and his stop loss, like, let's look at this right here. If you don't know where your right there. So if you enter here, for example, because you see the price is moving, where do you think your stop loss is going to be? Like, realistically, to have like a safe zone stop loss and you want to catch all the trade, you'll have your stop loss to be above the previous high right here, so you don't get hit in case of any high wicks or any high volatility that comes to the market. It doesn't wick you out and then goes back in your way. So you would have had your entry right here and your stop loss right here. Look at this risk to reward. It's 1.4. It's not worth it to trade it at this point. So that's the one thing that we look for here with the strike method, that we always look for a higher risk to reward. And we only look for A+ setups. I'm not saying that you're not going to take losses. You're definitely going to take losses, but with this strategy, I have 80% win rate. So out of 10 trades, I lose 2 trades. So what I looked for here, once I confirmed that I have a lower high here that didn't break above this one, I knew for sure that I have a structure, and I'm waiting for it to be broken. What I was looking for is to break below these lows right here. So I marked the structure right there. Let's do this again together. All right. So in this scenario, I know for sure that I have a downtrend because of the lower highs. But let's say, for example, it's not clear for me and I see a reversal coming. I will mark the structure. It's between this level and this level right here. That's already marked right here. And you usually mark it on the highest point of the body to the 5 minutes or the 15 minutes, whatever time frame you're working on. I usually love to take my entries on the 5 minutes to have a tighter stop loss. But the 15 minutes will give you a more clear idea on where the price is going. So down here, we already know where our structure is. It's anywhere between this body of the 5 minutes candle and this body of the 5 minutes candle. Between these two candles, between this price range, 4,047 and 4,061, Can I trade? No, I can't. I can just watch and wait for the price to either break above this level, give me a 5 minutes candle to sweep the level, which what I will call it a break of structure, sweeping the level, breaking above it, and then I can enter, set my stop loss below the previous low, and target the next 4-hour support. And that's how we get a higher risk to reward. Or in this scenario, since I already know that we're on a downtrend and I'm waiting for the price to break the structure to the downside, I'll be waiting for a 5 minutes candle to break to the downside. Let's replay this right now and see how it will look like. All right, guys. So once I seen this 5 minute candle, I was already getting ready to book my entry and stop loss. And I honestly was thinking that I will book my stop loss up here, but this was good enough for me to see that we have a higher low, a lower high that you can place your stop loss above. One thing that I will always recommend that you need to have your stop loss minimum 5 pips above your low, above your high or below your low, so you don't get triggered. It happened to me multiple times. I'm sure it happened to you, and it sucks real bad when the trade triggers you for 1 or 2 pips and then goes down your direction. It sucks real bad. Trust me, it happens to me all the time, and I hate it. That's why I love to have like 5 pips minimum above my stop loss, and I calculate this within my risk. So I'm not risking extra; it's calculated risk. So once you already know where your stop loss is going to be, you're just waiting for this 5 minutes candle to sweep these lows to tell you, hey, I already broke the structure that you were stuck in. So I'm waiting for this 5 minutes to close outside of this range. Once it did, and here you go. This is another reason why I wanted to show you this, guys. You see, the price already rejected and went up there immediately after. Look, if I did have my stop loss right at the wick, I would have been out of the trade. But that's why I recommend you guys to have 5 pips above. That way I'm still in the trade. I executed right there at this 5 minutes once it broke the structure right here. And then I targeted the next 4-hour support that we just marked on the daily, on the 4-hour time frame. And let it play. That was a very strong level, 4,021, and it got hit in literally like 15 minutes. That's the point of looking for your break of structure, guys. Once the price breaks the structure, it retests it once and it's straight to the target. 90% of my trades, I don't even see a drawdown. That's another thing that I love about the strike method. What we did right here is identifying the setup by seeing the break of structure. That 5 minutes was my key entry, which is the step number 5 in the strike method. Your key entry right there. You're looking for a confirmation. A key entry is basically a confirmation. If you don't see a confirmation, there's nothing for you to trade. Just walk away. Last thing that you do is execute. I know this could sound a little bit complicated, especially if you're new to the trading industry, but let's see another example right here. That was literally the same exact thing that happened to me. Let's see if you guys can recognize this. It's so easy, but I'm gonna mark the structure right there. Here we go. So this range right there is what I'm gonna call my structure right here. Okay. Anywhere between here and here, I cannot trade. That's a no trade zone for me. Okay. When I'm gonna be looking for a trade, if the price breaks above it, give me a 5 minutes candle to sweep it, or breaks below it and gives me a 5 minutes candle to sweep. That was exactly the same trade that I took this morning, and I took it 2 days ago. July, that was actually last week, July 26th. That was the last trade of the month, I guess. July 31st, last trade of the month. We had a very good month, and we closed the month with $50,000+ in profit. So what we're looking for here, guys, is the same thing to happen over and over again. Let's replay it and see if you guys can recognize this. Same exact thing. The price is stuck within this range. I'm looking for a lower high that didn't break above the previous one. That's already an indicator that we're going in a downtrend. So once I've seen this, I already confirmed that I'm going in short position. I'm looking for short position. So I'm looking for the price to sweep these lows right here. 1, 2, 3. I want 5 minutes candle to break through this and close. So that will give me an indication like, hey, I already broke the structure and I'm ready to hit your target. And why I'm always a big fan of marking my 4-hour support, because that will give you an indicator when you want to get out so the greed doesn't control you. Once the greed controls you and you cannot exit the trade, you will see your profit running $4,000 in profit and you don't want to collect it. And the price will reject and you will lose everything. Maybe you'll go back to break even. Maybe you'll even go back and draw down. You don't want to get this in your way. So before you even enter your trade, you got to know exactly where you're exiting your trade. Give yourself an exit plan before you even enter. So the support level is exactly where you're expecting the price to reject. And that's why you always want to be a little bit above the previous support level in case the price decides to reject a little bit earlier. But let's replay it and replay the trade again and see how it works out. We already set our stop loss right above the previous high, 5 pips above it. And let's play it. We got the 5 minutes that swept the low, guys, right there. That was my entry. It gave me a reversal. I took an entry right here and then let it play. Just like that. No drawdown. No drawdown at all. And it literally hit your target within 15 minutes. It's not that bad. Like literally, like you're sitting on a session. No, that's a little longer than 15 minutes, but it's closer to 30 minutes. But hey, look at this. You didn't have a single dollar in drawdown. And you basically could have just moved your stop loss to break even once your trade started moving your way. And that's another reason why I always look for the 4-hour support. As you guys can see, the price already rejected and went back up. So a quick recap here, guys. You will always be looking for a structure and wait for it to be broken. You want to wait for the price to touch and reject the level that you want to trade right off. So you can have your stop loss above the previous high that got created or the previous low that got created. The fourth one, you got to identify your setup. Once you go down and look for your structure, that's you identifying your setup. And the key entry is when you see the 5 minutes candle breaking through to give you a confirmation like, hey, I'm going down your direction. If you don't see all these steps and you can have a green check mark right next to all of them, 2, 3, 4, 5, don't even think about number 6. Just walk away and come back the next day. I hope this was easy for you guys. If you benefited from it, just comment down below and let me know. If you have any questions, leave them in the comments and I will gladly answer them in the next video. We trade live every single day on our Discord and it's free to join. I'll leave you the link down in the description. Feel free to come join us. And I also have my Instagram profile down there. I post my daily entries every single day on it. If you're not on the live, you still can catch them up. See you guys in the next video.